Good morning. On Sunday, I put on a new broker, IBFX, to show you some basic things of how to use Bryjon's World of Excel, and I wanted to show you in a simple form how to put on a 6-currency hedge even if you don't use a zero. It's simply looking at, we'll start at the basic 3, the Great British Pound. It's at its highest high, so if we look at the Great British Pound, it's a sell. The Euro, it's at its highest high, it's a sell. Then we look at the US dollar JPY, and that is a buy. It's virtually at its lowest low. So we want to look at, because we got a buy on the JPY group, we should keep our hedge, which is the Euro Great British Pound for the Euro group, on a sell as well. That makes sense. So we got a sell on the US, a buy on the US dollar JPY, and the other 3 should follow the same thing, buy. So we have a total of 3 buys and 3 sells, and you notice that is the way they go: the 3 buys, the 3 sells. There's the JPY group, the sells are the buys, and the US dollar as sells. Many times during the day this is run, and you notice I've used the smaller slots. Many times in the day this has run into what I call into a profit. At the moment we're in a minus lot, but it will switch varying between profit and loss during the day on the hedge. Even though we didn't go in at the 0 point on the Excel sheet, we just used plain logic, selling on the highest high, buying on the lowest low, our hedge. You notice we took a take profit. I put a take profit in there, and I did not put the take profit always at the bottom. I put the take profit at 10 pips above the bottom. Why? Because if this was an American broker, which it is, we can put a limit order on and a buy. If that was a sell, a buy 10 pips below. They'll allow you to sell, and then once that's taken off, you can have a buy. It's simply done that way. The limit orders are placed on the Australian dollar, and we'll have a look at them. The limit orders on the Australian dollar is done as I'm wanting plenty of orders on the Australian dollar. I've put the buys on at the lowest low, and then I've gone lower as per the bosun's lines. So although you can't see them here, I can show you later the bosun lines. I've used the next lowest. So therefore we have 3 limit orders on one at the limit order is on at the bosun line. The second limit order is down on the bosun line, and it's using support and resistance, and the third is down on that. So I have 3 limit orders on buys on the Australian dollar. Actually I have 4, 5, all at different levels. 1, 2, 3, 4, 5 on bosun lines, going down and up using bosun lines, and I've used different quantities. For the Australian dollar, I want some high interest currencies on. If they come on, I'm happy. If they don't, too bad. The buy limit orders on the Great British pound is about 10 pips. If you look at here, and we'll look at Great British pound, the limit order is 160570, and Great British pound is the take profit is 160560, which is higher. Should be. Did I make a mistake? 60570. Yes, I did. This limit order should be lower. It's a buy. No, that's correct. We put a buy on slightly higher so that we can continue with the counter trend. I hope that's not even clear to me. But really, what I'm trying to show to you on this is that with a overseas US broker, we need to have about a 10 pip separation between the buys and the sells, that it takes profit 10 pips above the buy order, 10 pips above in price the buy order, which then if that takes a profit on a sell, you're allowed to buy on. Okay, this is just basically roughly just showing you. This is only used as an indicators. Once again, I said these here can be taken off at any time. They're just indicators to show you when you're getting close to the lowest low. The profit and loss column here is clearly showing you where the market is currently going, and you can see that the two buys and the US dollar is going up in the buy, and the two, they're all following in pretty well. Good profit positions. Have a look. They're all going well because the actual profit on the bottom line is moving up as we'd expect it to. With that sort of hedge on, we have the buys at the highest, at the lowest low, and the sells on at the highest high. Okay, that's basically it for now. Sorry for confusing, but once again, your profit is about, if it's on a sell, it's about 10 pips above the bottom line, and your rebuy is on the bottom line. So from a sell, from the highest, the profit, take profit is about 10 pips off your bottom line, and your buy is on the bottom line. This is to cope with the US hedging strategies where you cannot put a buy and a sell on at the same time. So technically we're trying to overcome that. If the buy was on, the take profit would be 10 pips above that, and your next limit order would be on at the higher limit, so that if once that profit's taken and it goes 10 pips higher, you automatically have a reversal of the direction. The benefit of this is instead of a stop loss, you only have a 10 pip variation as a safety margin. You have a 10 pip as a safety margin. Okay, bye for now from Brian.